Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I'm delighted to welcome a very senior professional and a well-known author from San Diego, USA, Mr. Hunter Hastings. Hunter, welcome to the show.
Hello, and thank you. It's a privilege to be here.
Thank you. Hunter is the managing partner of Bialla Venture Partners. He's an author of a book titled Venture Mode: How to Escape the Administration Trap by Finding and Unleashing Entrepreneurial Leaders, and 6 other books. We're going to be speaking about his book today, Venture Mode. But before we come to your book, a few questions for you, Hunter. You have worked as a brand manager, a chief marketing officer, a startup CEO, a consultant, a venture investor, a mentor, and an author. Looking back, which experiences most shaped your understanding of entrepreneurship?
Well, I think, Ashutosh, it started from the very beginning, from my first job. I worked for a big corporate firm. I was, as you say, a brand manager. And I learned then about the customer, how important the customer is. I was in consumer packaged goods then, and my customer was a lady in America we call Mom.
Mm-hmm.
And one's job was to understand Mom, to get to know her, to love her, to take care of her, and to make her life better. And I think that's the kind of focus that entrepreneurs have. It's always about customers and helping customers. So I've carried that through all of those other stages that you talked about.
Very interesting. And what were some of your toughest leadership challenges that you personally faced as a CEO? And how did they change your philosophy of management?
Well, my first CEO job was what they call in Silicon Valley a restart.
Yeah.
A company that had stalled, and they needed somebody to come in and refocus it. And it was the same task to find out the customer. They misidentified their customer, and we had to start again with customers. And the hardest part is you're in what they call the J curve, when your costs are less than your revenues, and you've got to get up to the profitability path as quickly as possible. That's pretty stressful, being in the negative part of the J curve. And then my next one was as a startup from scratch, and that's the same challenge. How quickly can you satisfy your customer, understand their needs, get the product just right for the customer, while not running out of the money that you've raised from your investors. So there's a special situation at the beginning of startups, but after that, it's always about the customer, and that's the exciting part.
Very interesting. And Hunter, after writing several books and advising entrepreneurs for decades, what continues to excite you about entrepreneurship today?
Well, I think we're entering an age of entrepreneurship. I think entrepreneurship is going to become more and more important, not just for startups, for young people finding that's the better path than taking a job, but also for corporations, understanding, as we've written about in Venture Mode, that there are ways to cut out bureaucracy and have entrepreneurship inside the company, which makes for faster growth and better service to customers, more profitability, and in the end, making more money because you're serving the customer better. So I think a lot of companies are beginning to understand entrepreneurship more than ever before.
Well said. Let's now come to your book, Hunter, Venture Mode: How to Escape the Administration Trap by Finding and Unleashing Entrepreneurial Leaders. And before I ask you a question, I'm going to ask all my viewers and listeners to go and check out Hunter Hastings' book. My first question for you, Hunter, here is, what problem in the business world compelled you and Mark Packard to write Venture Mode?
Businesses are losing their productivity, Ashutosh. Our data is mostly from the US, and we calculated that productivity growth is running about half of its potential, or wasting half of our effort. And if you look at the S&P 500, about 70% of companies are just returning their cost of capital, or maybe slightly less. And in the Russell 2000, the smaller caps, about 47% are reported to be unprofitable, and they can't pay their interest costs. Now, on the other hand, 30% of companies are very profitable, fast growing. And we wanted to show how the majority, those that are losing productivity and losing profitability, can be like the minority, the ones that are doing really well, growing fast, serving their customers well. So that was the problem we were trying to solve.
Hmm. And if you had to explain venture mode to a CEO or to my viewers and listeners, how would you describe your book?
Venture mode is a self-managing customer service loop that continuously improves the amount of value that's delivered to the customer and therefore revenue and profitability. And the way it does that is cutting out all bureaucracy and making sure that every job is a value creation job. Every job can be tested as to whether it's contributing to customer value. So that means every level of the corporation, from the CEO to the front line and every function in the corporation, it's always tested about, is this job, is this service creating value for the customer? And you can cut out bureaucracy by making that test and ensuring that every job is value creating. So if you do that, the constant loop is the customer will always tell you where there's the opportunity for improvement, and people who are freely being creative and being adaptive and being innovative can use that loop to feed back to the customer, well, here's my improvement, get the same reaction. And so you have a continuous improvement acceleration. That's venture mode.
Very interesting. You make a provocative statement that business school is killing business. What exactly do you mean by this statement? And give me an example if you can.
Well, every culture has institutions that preserve its traditions and glorify its traditions. And we have the tradition of scientific management, what they call business administration. And you get an MBA in business administration. That's the A. And that's preserving what in the past was best practice. But that's not what grows businesses and makes them profitable, makes them create value today. Those best practices were invented 50 to 100 years ago to run manufacturing businesses and factories and things like that. And so business schools enshrine that. A young undergraduate goes to business school, gets a degree, gets hired into a prestigious job, and takes those best practices, those erroneous old-fashioned traditions, and instills them in his new company. So that's how they're killing business. One of the stories we tell in the book, Ashutosh, is about Brian Chesky, who was the founder of Airbnb. And he said, I grew my business to a certain size, and then they told me you got to hire professional managers, people with MBAs. And he said, I did. And they almost ruined the company.
Wow.
And he then cut out all of those management layers, and himself, as the founder, got back into what he calls the details of the company, the details of the product. It's not micromanagement. It's being as close to the customer, as close to the product as you possibly can. So he's the great example of how business schools were killing business. They almost killed his business, but he rescued it.
What a great story. Thank you. Moving on, how can leaders recognize the early warning signs that the company has become or is becoming bureaucratic?
Yes, I think there are two signs. One is what we call distance to the customer. There's a famous company in your part of the world, Hire, who commits to zero distance to the customer, that everybody in the corporation has to be talking to customers, not having any distance between them and the market. And so you can test for that. Does everybody in the company understand their customers? Do they feel for their customers? Do they engage with the customer? Is the customer driving them? Is the customer their boss? And if that is not the case, then you've got to sweep away the barriers to that and make sure that everybody is oriented that way. And the second thing, I think, Ashutosh, is speed. So speed is a competitive advantage these days. Bureaucracy tends to slow things down. There are more layers of approvals, and it's more difficult to reallocate capital and those kinds of things. And so find a speed metric like time to market or number of innovations shipped per year or lines of code shipped per year, and check whether that's competitively fast enough. Can you speed it up? And I think you'll find that removing bureaucracy is one of the things you can do to speed it up.
Great response. Your book builds on a discussion around founders mode. How is venture mode different from founders mode?
Yeah, so founders mode actually came from Brian Chesky and from a fellow called Paul Graham, who was the original founder of Y Combinator, one of our great accelerators. And they looked at the data about why founder-led companies did better, grew faster, or more profitable than were managed companies. And so they attributed it to the passion and commitment of the founder. And like Brian said, being close to the customer and the product. And you hear about Elon Musk sleeping on the factory floor to be close to the bottleneck to solve the problem. He wants to talk directly to the engineers. And so that's founder mode, that passion, intensity, commitment of the founder. But you need to be able to do that when the founder is gone, when the founder isn't around. The founder, he or she has sold the company, or they've moved on and the company got much bigger. And so venture mode is really founder mode without the founder. It's that same intent, that same passion, that same commitment. And it's not management. It's the opposite of management. You have to remove all of the traditional management and think like a founder.
Interesting. You just gave me the example of Elon Musk, and before that, you gave me the example of the founder of Airbnb. My question, Hunter, is why do founder-led companies often outperform professionally managed companies?
It's because those founders don't fall into the opposite trap, what we call administration mode, the administrative trap. They are vigilant about cutting that bureaucracy out, always feeling for the customer, always feeling for innovation, always feeling for speed. And so there's something about a founder's commitment that stops that erosion, that entropy from happening. And you see it in the numbers. You see that they do perform well. There's a chart in the book about the rate of growth and the rate of profitability of founder-led firms versus non-founder-led firms. And there's a big gap, and it's increasing. So you look at NVIDIA today as an example. Jensen Huang was one of the 3 original founders. He's still there. He's the longest serving CEO in Silicon Valley, I think. And he runs it like a founder. He famously has 62 direct reports, and there's nothing between him and them. He wants emails from everyone in his company about what is most important to them and what's going on. He gives them freedom and autonomy, but he drives them. He calls it the speed of light. That's the fastest you can possibly go, so we're going at the speed of light. And so that's an example of a founder-led company.
Wow. One of your core arguments, Hunter, is that businesses should focus on value creation rather than value capture. What is the difference? And give me an example.
Yeah, so value creation is what we've talked about. It happens in the customer's domain, what I call the customer space. So you understand the customer's needs. There's always a signal coming from them. Something could be better. They're dissatisfied. Whatever great product you're selling to them, they always think they could be something better. That's the great genius of the customer. Value creation is responding to that, giving them an innovation, and getting the reward from the customer, the willingness to pay, which is revenue. So that's outside the firm. It's in the customer's space. Value capture is in the company space. It's how do we put that on the balance sheet? How do we put it on the P&L? How do we send it to our shareholders? How do we make that look like great financial reporting? That's how people tend to talk about value capture. And they talk about market share, and they talk about stickiness and those kinds of things, which are not customer-oriented elements. So value creation is in customer space. Value capture is in company space. And that's what you see in the traditional S&P 500 companies that aren't growing. They'll report revenue and profits. They'll report quarterly earnings. They'll capture that value, but they're not creating new value, exciting value for the customer.
Very interesting. Why is empathy such a critical entrepreneurial skill?
Yeah, isn't that fascinating? You don't normally think of it as a business skill, but you you've got to understand the customer and understand their mind. Value is in the mind of the customer.
Yeah.
So you've got to be in the mind of the customer. Now, you can't think like other people think. You can't feel what other people feel, despite what Bill Clinton said when he was president. So you have to empathize. You create a model of how your customer thinks, and then you run your experiments, you run your script, as I call it, through that model to see how they would react to your proposition. To be able to do that, you got to have empathy. You got to be able to understand the customer, get inside their mind, sympathize with them, be on their side, take their perspective. And that's a skill. It's a skill I think we can teach. We call it the entrepreneurial mindset, and it can be taught.
Interesting. You also suggest that venture mode is especially relevant in the AI era. Why do you believe so?
Yeah, so there's two exciting things about AI, Ashutosh, on that front. As we've talked about, entrepreneurship is a lot about sensing. The data doesn't tell you exactly what the customer's thinking. It doesn't tell you exactly what they're going to do next. It's fuzzy logic. AI is really good at that because it can discern patterns that the human being can't, and it can pick out anomalies, and it could find pointers to new spaces, and it can do that faster and better than humans. So that's one thing. So entrepreneurship should have better sensing, finding new truth that they didn't understand before. And the second thing we talk about in the book is entrepreneurship is action. It's not strategy, it's action. And that action is often experimental. So I don't know what's going to work in the marketplace. Let me run this experiment, see if the customer likes it. I can rejig it, I can revise it, I can re-prototype it, I can send it back and do that loop that I was talking about. AI can do that faster and at lower cost than we ever could before. It can create those experiments. It can create the software if that's your product. It can mock up the features. It can run the simulation with customer data and make the loop go faster. So those two things, it can find new truths for you, insights as we call them, and it can run your experiments faster, so faster discovery and faster time to market. It's exciting.
Absolutely, I agree. And as AI automates many managerial tasks, which human capabilities, in your view, become even more important? And I'm sure one of them will be empathy.
Well, yes, so that's another exciting part. We'll get rid of bureaucracy by automating it. We don't need the bureaucrats anymore. Yeah. And they'll be put to greater and higher use. So I think there are elements of human intelligence that AI will never be able to reproduce. So we talked about empathy. So AI can't think like a human being, so it can't have empathy, but also just judgment, the willingness to go forward with incomplete data. That takes courage, and it takes that kind of commitment that we talked about. The passion that entrepreneurs have, and the ability to sense that we talked about. The AI will see the patterns, but the human will say, yeah, that's right. That's the one I'm going to explore. So I think there's just a ton of primal intelligence, the emotion and that kind of components of intelligence that humans relate to humans. So people relate to customers, and AI won't get there, at least not in your and my lifetime, Ashutosh.
Absolutely, I agree. Hunter, I have time for two more questions.
Okay.
You propose replacing the MBA with an MBE, which is Master of Business Enterprise. What would an MBE graduate know that an MBA graduate may not?
Well, we took the A out of MBA so that our students won't learn any administration as it's traditionally taught. And the MBE has two major components. One is learn principles, because principles scale. Tactics and administration don't scale because every company is different. But the principles always apply. So the principles of value creation, the principles of relating to customers, the principles of innovation, those kinds of principles of growing business. So we can teach those, we can learn those interactively. AI will help, but it's active learning. And then the second part is bringing back the old concept of an apprenticeship. We might not call it that, but the student who's learned the principles goes to a hiring corporation to apply them. in real life, in real time, on a real team with real problems to solve and real resource restrictions, and learns how to apply those principles in a real situation. And if he does well or she does well and the company likes them, then there's a job at the end of it. But they've learned two things that the MBAs haven't: the right principles and the real experience.
Well said. Well said. And my last question for you, Hunter. If you could leave entrepreneurs, CEOs, and future business leaders with one venture mode principle that they should consider adopting immediately, what would it be and why?
The principle in economics is customer sovereignty, and we've talked a lot about it, Ashutosh, but it's really hard for big companies to adopt. The customer is the boss. The customer directs your company. The customer drives your job. And Jeff Bezos is really good at this. When he was at Amazon, he called it working backwards. And it's the reversal of the traditional way of doing business, which we produce, we sell, we take it to the customer, and we take the money in return. Working backwards is to start with the customer and their needs and their wants and their life, and understand their ecosystem and what will please them, what will make their life better, and then work backwards from there. And that's the first principle that it's really hard for big companies to learn, but it can be done.
Amazing. And on that note, Hunter, I just want to say, what a fascinating conversation this has been. Thank you for speaking to me about your perspectives. And I love the way you gave me the example of the mom customer or the mom brand, so to speak.
Yeah, she was my favorite.
Absolutely. And you spoke a lot about customer sovereignty. And as you were talking, I was thinking that customer experience, or CX as it's now referred to, is almost $1 trillion business in the world and growing very, very rapidly. Thank you for talking to me about your book, Venture Mode. I think we covered some very interesting ground on managing administration, managing bureaucracy, and inserting enterprise in place of administration into an MBA. Thank you for speaking to me, and good luck to you.
Thank you very much for the invitation and the privilege. Thank you.
Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website, www.tbcy.in, to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.